Wow. It's it's hard to ignore what's happening in the markets right now.
Yeah, no kidding.
I mean, when you look at some of the big names out there, Amazon, Apple, Nvidia, Broadcom, Google, Meta,
All down.
even the financial institutions like JP Morgan, Bank of America has seen some pretty significant drops.
It's definitely a widespread sell-off.
And what's interesting is, some of the more defensive sectors like healthcare and consumer staples, those are showing mixed results.
With a slight positive bias, yeah.
Exactly. So it's not like everything is tanking, but if your portfolio is looking anything like mine, it's definitely taken a hit. I think mine's at its lowest point in the last like 4 or 5 months.
Oof, yeah, that's rough.
So I'm sure a lot of people listening are probably wondering what's going on and what does this mean going forward?
Well, I think the widespread nature of the sell-off is really telling us something.
Yeah,
It seems like there's a broad market concern at play here. It's not just a few sectors that are struggling.
for sure. And if you're looking for a culprit, I think you got to look at President Trump's increasingly aggressive stance on tariffs.
Yeah, the tariffs are definitely a big factor.
Some estimates are suggesting that the weighted average tariff rate has gone up by over 15%. So higher tariffs mean higher costs for companies importing goods, and then those companies, they have a choice to make, right? They either try to pass those costs on to consumers, which could lead to inflation, or their profit margins get squeezed.
And the market hates uncertainty.
Exactly, and that's exactly what's happening now. All this uncertainty is spooking investors, and that's why we're seeing this sell-off.
So the big question for us today is this tariff-induced downturn a sign of things to come?
Right.
Is this the beginning of a larger decline, maybe because of the negative economic impact of those higher tariffs? Or is it actually an opportunity to buy into some fundamentally strong companies?
Whose prices have now dropped? That is the question, isn't it?
It is.
So let's dive into that a little
Yeah.
bit. When we see these big market swings like this, it's often driven by short-term sentiment.
Mm.
You know how investors are reacting to the latest news?
Knee-jerk reactions, right?
Yeah, exactly.
Mm.
So a big tariff announcement like this can definitely create fear in the market
Absolutely.
and lead to a wave of selling, which is what we seem to be seeing now.
Makes sense.
But I think it's important to remember that over the long term, what really drives investment returns is earnings.
You're absolutely right. While the news and market psychology, they can definitely drive short-term price swings, the real driver of long-term shareholder returns is a company's ability to generate earnings.
Yeah, I mean, a company's stock price, it might go up and down in the short term based on all sorts of factors,
Yeah.
sentiment, news, whatever.
All that noise.
But over the long term, if a company's consistently growing its earnings, that will ultimately be reflected in its valuation.
Exactly. The fundamentals always win out in the end.
So let's take an example to illustrate this. How about ASML?
Okay.
So ASML, their stock price has seen a pretty significant decrease over the past year, and even in this recent market downturn, they've taken a hit along with everybody else.
Right, but they're still a solid company.
Exactly. And when you look at the projections, the earnings estimates for ASML are actually expected to grow quite a lot through 2030.
Really?
Oh yeah, potentially annual growth rates in the high teens, even higher.
That's impressive.
Yeah. So even though their stock price has dropped, the fundamental expectation is that their future profitability is going to be very strong.
So there's a disconnect there between the current price and the projected earnings growth.
Exactly. And that kind of disconnect is exactly what can create opportunities for long-term investors.
It's all about looking beyond the immediate market noise and focusing on the intrinsic value and the long-term growth potential of a business, right?
That's it.
Short-term price declines driven by sentiment, like we're seeing now, they can sometimes create opportunities to acquire shares in excellent companies at a discount.
It's like a sale at your favorite store.
Exactly.
But the tricky part is, recognizing those opportunities and acting on them.
It's easier said than done.
Because, human nature being what it is, we often do the exact opposite.
Oh, yeah, for sure.
There's tons of data out there that shows that investors tend to buy when the market is rising, when everything looks rosy, and then they get hesitant or even sell when it starts to fall.
It's like they're chasing the momentum instead of thinking for themselves.
It's that fear and greed cycle.
The old buy, high, sell, low trap.
Exactly. And we saw this play out pretty clearly between 2020 and 2022. There was a lot of buying at the top of the market, and then when things started to turn, people panicked and sold.
It's so hard to go against the crowd.
It is. There's that famous saying, be greedy when others are fearful and fearful when others are greedy. But it's a lot easier said than done
For sure.
because our emotions can really get in the way of making rational decisions.
Absolutely. And even if you can overcome that emotional hurdle, trying to perfectly time the market's bottom is almost impossible.
Nobody has a crystal ball.
Right. Think back to the 2020 market crash. It was a steep decline, but then the recovery was really fast.
Yeah, it bounced back quickly.
And a lot of people who waited on the sidelines for the absolute bottom, they missed out on some significant gains.
Ouch.
So that's why a strategy like dollar cost averaging can be so effective.
Yeah, dollar cost averaging is a great way to take the emotion out of it.
Exactly. Instead of trying to predict the market's low point, you just invest a fixed amount of money at regular intervals.
So you end up buying more shares when prices are lower and fewer shares when they're higher,
And that can help you achieve a better average purchase price over time.
without having to try and time the market perfectly.
Exactly.
I also came across something a chief investment officer said that I thought was really relevant to our conversation today.
Okay.
They were talking about the resilience of companies that have a history of consistent dividend growth.
Interesting.
And they were specifically highlighting this in the context of uncertain times like the current tariff situation.
Oh.
The idea is that companies that have a long track record of increasing their dividends are likely to continue doing so even when they're facing challenges, because it's a signal of their underlying strength and profitability.
It shows they're committed to returning value to their shareholders no matter what.
Exactly. It's like a vote of confidence from the company itself.
Yeah, that makes a lot of sense.
And I've actually seen this firsthand in my own portfolio.
Yeah.
Despite all the ups and downs in the market, my projected annual dividend income has actually continued to rise each month.
Wow, that's great.
Yeah, and that's largely because of the companies I've invested in. Companies like ASML and Microsoft.
Solid choices.
They're both expected to continue growing their free cash flow and their dividends over the long term.
So you're getting that dual benefit of potential capital appreciation and a steady stream of income.
That's the idea, and that income stream can really help to provide a buffer during those volatile periods.
It's like a safety net.
Exactly.
Yeah.
So it seems like for long-term investors who are really focused on the fundamentals and dividend growth of high-quality companies,
Right.
these market sell-offs triggered by events like tariff concerns, they might not be such a cause for alarm.
Yeah, maybe they're more of a buying opportunity.
That's the way I'm starting to see it.
Yeah.
A chance to acquire shares in great businesses at more attractive valuations.
But it does require a shift in mindset, right?
So I feel like-
From reacting to fear to acting with a long-term value-oriented perspective.
Exactly. You got to tune out the noise and focus on the fundamentals.
That's the key.
So to wrap things up, while the immediate market response to these increased tariffs has definitely created some uncertainty and pushed stock prices down,
No doubt.
for those investors who are in it for the long haul, who are focused on earnings and dividend growth of fundamentally sound companies,
Right.
this period might actually offer some good opportunities to buy in at more appealing prices.
It's all about perspective and having the courage to act when everyone else is running for the hills.
That's it. So as you're navigating this current market environment,
Yeah.
I want you to think about the long-term growth potential and the ability to consistently pay and grow dividend.
Wow, the key factors.
Yeah, of the companies you're invested in or those you're considering adding to your portfolio.
That's a great point.
Ask yourself, how well positioned are these businesses to adapt to this new tariffs landscape and continue to generate value for their shareholders in the years to come?